And let's stay with the theme. The Monetary Policy Committee, as you heard earlier, keeping interest rates on hold at 8.25% in its first meeting of the year. Now, the decision was unanimous, but the choice to maintain rates at a fourth consecutive MPC meeting comes after annual consumer price inflation eased for a second month to 5.1% in December. Let's dissect this further. Now, we're joined by SABC News economics editor Tshepo Mongoai. Tshepo, thank you so much for your time. While, of course, some households possibly breathing a sigh of relief, but as we heard just a short while ago how, the data when it comes to some of the food prices is also just choking them a little bit. But let's talk about the tone that we picked up from today's, address by the Reserve Bank Governor of the MPC going into this meeting.
I think the MPC is looking for a downward trend that is quite sustainable over a period of time. So they're looking for a trend to be so that they're convinced that indeed this is sustainable and they can start consider to cut interest rates. And also remember, there is a lag in terms of the transmission mechanism of those previous hike that we have seen. So they want to be convinced that, indeed they understand what they're dealing with, but also to anchor the inflation expectations so that inflation is not generalized in the economy. Already we are seeing there's completely no demand at all. So the transmission is a little bit slow. Businesses are taking in a lot of pressure because it's just not possible not at all times to pass on those very high costs. We've seen with the Black Friday figures, not much was happening despite the massive cuts in prices that many retailers came up with, but there's just no demand in the economy. And of course, if you listen to them, they are still concerned. They're concerned about the uncertainties that are still in the horizon and how that will eventually affect the inflation going forward. I mean, the geopolitical tension that we are seeing and its impact potentially on the international oil price is one thing that they're concerned about.
As well as climate change as well.
Climate change, of course. We are dealing with it at all the times. We've seen it with the floods and so forth, and how that will affect food production. Not only here but elsewhere, and that could be inflationary. Interestingly, they didn't say much about the local political situation, but I'm convinced that that's another element that they will be watching very closely to see how they will incorporate it. Perhaps in the next MPC, there might be space in order to talk about that.
And Tshepo, speaking about, other risks that they touched on as well, we heard about the ongoing performance of Eskom, for example, the ongoing performance of Transnet, and what we've been seeing over time happening there. And that, of course, also posing a risk. But one would then wonder, as we're talking tonight, how much of a risk does this continue to pose on the economy?
Well, it's quite substantial. I think one is on the fiscals because we are, spending a lot of money to assist Eskom and now Transnet. And that is a major risk because the more debt that, sovereign debt that rises, the risk of repayments and how long it takes to repay that debt, and we become very difficult to attract capital, and otherwise becomes very expensive even if we do. But also it's a service that the economy needs in order to get going. If we are not able to provide electricity, for example, which one of the risks is the cost of electricity, it's one area that could be inflationary. If we're not able to move goods and services and goods that we really need in the economy, that could also be inflationary. Investor perception, how they look at South Africa, that could weigh on the rand as a risk. And that could be a trigger for a weaker rand, and that would pose higher prices in the economy.
And let's stay with investor perceptions, because while there is that perception, there's also, the real risks that you talk about, the debt, you talk about the rising interest rates, geopolitical issues, as well as what we've seen in terms of, electricity supply, Transnet, what's happening at the ports and all of that. But apart from the perceptions, what does it do to the investors' appetite?
Well, I think if we're speaking from the Reserve Bank's position, I think they, in a way, indicated that, look, you shouldn't expect us to do everything. National Treasury, government departments have a huge role to play to bring some relief to many households. We can only use this monetary policy as one instrument, and their primary focus, and you can see that they are quite focused on that, is to bring price stability and ensure that we don't have prices that are generalized in the economy. And the fiscal has space in order to play the issues around competition, the issues around social spending, and there are a whole lot of things, unemployment, and we don't expect the Reserve Bank to play as much in that space. But of course, they can do one thing, bring in some stimulus in the economy, and that is possible. And if you listen, there is that acceptance and understanding that we are starting to see prices coming down. Not only here in South Africa, globally, prices continue to come down. And obviously that will bring in some relief through interest rates. When the Fed, for example, start cutting, analysts are saying it's highly likely that we would see the Reserve Bank cutting. But I don't think you would expect the Reserve Bank to say, no, we are definitely going to cut, because there's a certain message that they are trying to put across among consumers and business that, you should not relax. We still have inflation. We still have a problem here. So you need to behave in a particular way so that we contain this inflation. But in reality, we could see interest rates coming down. And
I tell you what, we're all waiting for that moment. And I'm sure there'll be lots of celebrations around when that time comes. But as you say, until then, behave, and lots of uncertainty, even as it is an election year now. But Tshepo, thank you so much for stopping by. That is SABC News Economics Editor, Tshepo Mongoai.